Hello everyone, this is year 4 review of the simulation. So you can see here for the current round points, most teams were in that high 300s to 400 range, which is where you want to be. Now we have 2 rounds left, so when you look at your total points, you want to get up to, you want to get above 2,500. So we have a number of teams that are over 2,000 already, which means you only have to get about 250 points for the next 2 rounds to get an A in the simulation. For these teams that are below 2,000 points, you should figure out how many points you need to get as a minimum each round to make it to that full score of 2,500 for the simulation. Now, let's just go back up here for a second. Gross profit margin, again, I had recommended that everybody bring their profit margins out of the 40s and into the 50s. Now, going into round 5 and 6, you want to strive for, most teams should strive for getting up into the high 50s, if not 60s, in profit margins to remain competitive in the simulation. Okay. You can see that there's a nice dispersion of stock price between $29 and $97 per share, as certain teams are pulling ahead and certain teams are performing well and making the right choices. Their stock is being rewarded. And remember, if you ever checked out a stock, if they ever disappoint on revenues or earnings, the stock price does not go up. So these teams that are improving their profit margins are seeing higher stock prices. Okay. So we talked about total points. Now the operating profit margins is basically your efficiency with marketing. Since all teams' fixed costs and variable costs are on the same basis, it's really the cost of marketing that's going to change your operating profits. So companies that are marketing the most efficiently will have a better time maintaining or improving their operating profit margins. Earnings per share is simply your net profit margins divided by your outstanding shares, which are down here in net profit margins. Now, what affects your net profit margins are, of course, taxes and interest. So taxes are the same for every team. Interest is based on how much money you've borrowed. So if you borrowed a great deal of money, you're going to be wanting these later rounds to start paying it off to reduce your interest expense, which will help your net profit margins. Okay, so let's just go to the bottom here. So your total asset turnover and return on assets are 2 similar variables, and we're looking at the efficiency of assets. So how the amount of profits to assets is the return on assets, how your the relationship between your profits and assets to see what type of return you're getting on those assets. And the higher this variable, the better. And the total asset turnover is related to assets to sales. So gauging how efficient your assets are. Okay. And talk about these. So let's look at some of the charts for the industry. And we see here, this is the net profit chart. We have a nice upward momentum, nice trend here, which teams are gaining more and more profits. And we have 3 team leaders in profits here that are doing very well at maintaining and increasing their profits. And since this simulation, each of the orders are going up by such high percentage points of revenues, you should be able to increase your profits in a similar manner. Also, if we look at points, we see that points are settling in around that 400 mark. So most teams are getting to about 400, which is what you need if you have 5 rounds at 400. We have 6 rounds. 6 rounds times 400 is about 2,400. So you want to be doing about 425 points on average each round. And again, the first round is the easiest round to make points because you're correcting from all the bad management in year 0. And now moving forward each round, you are working to improve on your past results. And that's the year-over-year overview. Okay, so if we see stock price, we talked about there is a big, everyone's stock price is going up because we have a growing industry. Sales are growing, profits are growing for most everyone, so all profits are going up. But stock price is, very closely tied to profits. And the company with generally the company with the most earnings per share and the highest profit margins will have the highest stock price. We see that sales, there's only one team here that's kind of back on sales, and they should really reevaluate what they're doing and look at the other teams, because the other teams are selling much more in their cars. And we see a much tighter pack here, but we have a bottom of 564 million and a top of 666 million. So it's pretty, so there's about $100 million difference between the lower end of this pack and the higher end of this pack. And again, researching and looking at the industry charts and the industry data will help understand this. And we can see that here we have a clear lead over earnings per share for one team. And one trick to increase your earnings per share is to buy back stock, because that will reduce your outstanding shares and help you take your earnings and spread them over fewer amount of shares. Okay, we really only have one team here that went down on earnings per share last round. Okay, all right, so that's just a quick review of how companies did on these charts. I'm going to go in and show you what I would have done for round 4, and so I'm in round 4, and I can see that I did pretty well last round. My profit margins are 59 and 38%. So I want to go into try to get into that 60 percentile range. I can check out my assessment for hints on where I could do better, and I can look at the charts, specifically the performance chart. I want to look at to see, how my forecasting was. And again, luxury could have been a little bit more generous, and I messed up on my forecasting by 273 cars on sedans. So I got to really think about that when I'm forecasting my sales again. Look at the industry charts to check out what my competitors are doing and how they're pricing and how much money they're spending on marketing and advertising and their ratios, their financials, and I'm back to my sales. So for year 4, I'm going to go in and redesign my cars. See, okay, so I am actually doing pretty well on my profit margins now because I invested so heavily in my operational investments that I can actually start meeting my forecasting goals and my profit margin goals because of the heavy investments I've made in operational investments. All right. So again, I'm above. I'm above the. Once again, I'm above the percentage that I want. My last percentage I left off at 59, so I want to be in the 60s now in this round. And I am just redesigning the cars to try and maintain that amount. So here. Okay, 60%, as long as I'm above 60. Now, I see that I didn't have that many operational cost reductions for luxury. I should really fix that this time around. Let's see if I can get this 62. Yeah, so, okay, so I'm going to be above 60, but not quite as high as I'd like. So, but at least I am moving in the right direction this round. And I'm just going to pause it while I do the marketing because it takes a while. Okay, so now I'm in production here. It looks like I only need 2 new plants, which is going to help with my total asset turnover and my return on assets. So I have to remember to factor in that I have leftover inventory on truck. Okay. And I'm going to, I want to increase my operational investments here. Okay. Moving to the last round, let's see what my surplus, okay, I have a $41 million surplus. So I'm going to start retiring some of my debt, which is a good round to do it in. and perhaps buy back some shares of stock. Okay. All right. So I still have a pretty decent surplus. That 13 million, I'm a little worried about having a deficit, so I'm going to make that 18 million. Okay. So I retired some funds, bought back stock to help my percentages, and I'm going to complete round 4. Okay, now I'm in round 5. I got my 420 points, which is I'm trying to get about 400 points each round to get that 2,500, and I could see that my profit margins improved, but my operational profit margin went down because I spent heavily on marketing, and my net went down because of my marketing spending, and that kind of hurt me. So I overspent on marketing, and if I look at my performance charts for year 4, I'll see that again I may have marketed too aggressively because on most of my cars I sold out, I stocked out. So it's not the worst thing, but you know, when that happens, I got to really reassess my forecasting abilities. Okay, so that's my quick review of the results from round 4 for the class and how I would have completed round 4 and the results. Now everybody, we have 2 more rounds to go, round 5 and round 6, and remember, try and do your best you can on this. And some advice, definitely check out the industry to see how other players are doing it. You have an individual practice that you can go into and test out your different ideas to see how that plays out, and before it goes live you can actually test it in the practice round against computer players and see at least if you're on the right track with your forecasting and your advertising, and then do the team competition. Okay, so good luck in the last 2 rounds, and I'm not going to review round 5 with a video, but I will wrap things up after the last round, round 6. I'll wrap everything up and summarize the competition. Okay, thank you for watching this, and I'll talk to you soon.